price. Do we think this is an overreaction by the sellers? There were talk about margin calls for people when it came to stock market. They were meeting margin calls, selling out of gold. Who knows? I think it's always easier once these things have happened to come up with reasons. But for now, if we take this as an overreaction, then actually we could view this as a buying opportunity. So what I want to focus on is what's been going on really this year. So let's step things in and take a look at the hourlies. So this is really what I'm interested in for the trade. We have the lows from mid-Jan around about 1535. You can see, of course, the market pushed up towards 1700. It's dumped and come back to 1560. And I'm just wondering, is this the overreaction? So let's focus on this and see what the trade could be. So for me, probably the loosest stop at the moment would be the other side of 1535. So the other side of these lows from mid-Jan. I think there are more aggressive stops if you wanted a shorter term one, but let's just focus on this price action over the last couple of weeks. So we are seeing the price stabilize. At the moment, at the time of recording, it's trading around about 1598 an ounce. The lows after that big sell-off are in at 1562. So clearly, one aggressive point for a stop is the other side of 1562, 1560, 1555, pick a number. But the other side of those lows, if we do think this is an overreaction, then that's, for me, the tightest place for a stop loss if we're going to be a buyer and look for a push back up to those highs from the end of Feb. This 1560 level also coincides with the lows, the mid-Feb lows, where we saw the market trade sideways before that run out towards 1690. So there's a lot stacking up at 1560 an ounce on gold. So for me, that's the trade I'm going to do. I mean, perhaps, again, the better trade would be to see if we get a bit of a pullback over the next couple of days. Maybe we get a better entry point. But for these videos, we just put the trade on when we're doing the video. So let's get it on with a stop the other side of 1560. So the first thing to do, put a stop in. So I'm going to say 1550 for a stop. So at the moment, with a level of risk in my dealing ticket, my risk is, £230. We normally risk £200 in this trade. Let's just knock that size back. So I'm a buyer at 5.3 with a stop at 1550. The market's trading just above 1598 at the moment. My risk is a couple of £100. Let's get that trade on. So as usual, we get the confirmation bottom left. We bought 1598.46. We got stopped out of a few gold trades on the way down last week. Let me just show these. So 4 trades there stopped out in the sell-off. If we go to the portfolio, see what we've got on at the moment. So a couple of really old trades running in there with wider stops, so they didn't get hit last week. This is the latest one we just did, buying 5.3, 1598.46 with a stop at 1550. And I think it's a fair enough trade. If we go back to the dailies, it's been a really volatile couple of weeks, but for my money, that sell-off doesn't change anything. It doesn't change the trend. We could pick up on maybe a sharper trend off these December lows as well, 15 sort of 35.